One of my largest holdings throughout my 7-figure investment portfolio would have to be my 1,000 shares of Verizon stock. Now, these 1,000 shares of Verizon of mine were purchased years ago, and although Verizon seemed to be a promising long-term investment opportunity with not only a long-term dividend history and also some slow and steady dividend growth, the stock seems to have done a whole lot of nothing besides sell off lower and lower and lower week after week after week. Now, if you personally own any shares of Verizon like I do, or have thought about buying into Verizon, stay tuned in this video because we are going to do a deep dive into the now 7.3% yielding telecommunications stock and see exactly what the future outlook could be. Now, we're going to go over this and more right after you please drop a like in this video and subscribe for more content like this in the future. Now, Verizon is currently trading at $34.58, and it seems like not all that long ago that Verizon was over $50 and at one point even a $60 plus stock. But if we were to zoom out on the max chart, Verizon is down 29.48% since the stock's inception. Now, in the 52-week range, Verizon is pretty close to the 52-week range low of $32.79. and the 52-week range high of $52.18. Now, Verizon is currently yielding around 7.31%, which is almost as high as the stock has ever yielded in my recollection. And although Verizon does have a few headwinds in front of it, to say the least, the stock does have a good history of paying a quarterly dividend and even a small bit of dividend growth over the past 20 years or so. Now, like I said at the beginning of the video, I actually personally own over 1,000 shares of Verizon. Here's a screenshot right here from my big portfolio where I do own exactly 1,000 shares. Now, I didn't buy all these 1,000 shares of Verizon at one time, like you can probably guess. I purchased shares of Verizon over many years with the hopes of building a long-term stable pillar in my portfolio. A stock that isn't very high beta, meaning that historically speaking at least, the share price doesn't move around violently all that much even when there is a lot of craziness going on in the market. Now, I bought into Verizon because of that and because it was offering a pretty good stable dividend and with the track record of some slow yet steady dividend growth. Now, I purchased Verizon shortly after I got out of my AT&T position, which, believe it or not, somehow, some way, I got out of my AT&T position right around late 2020 before it really started to sell off. So to put things simply, I went pretty big into Verizon stock because it was offering a good solid starting dividend, the stock had a pretty low beta, and the company's outlook overall seemed to be in a really safe place. Now, this was at least all until recently. There's a new article. It says telecom stocks fall on a report that Amazon considers launching a mobile service for Prime members. It then says Amazon is in talks with Verizon, Dish, and T-Mobile about the possibility of launching a low-cost mobile service for Prime members, Bloomberg reported. A mobile plan could serve as an attractive hook for Amazon to lure in more Prime subscribers. Now, one thing's for certain when it comes to Amazon. They really will do almost absolutely anything to get more and more people into their Prime membership. And now, in retrospect, it seems like I guess it was only a matter of time until Amazon's Prime membership program offers some sort of cell phone carrier program for their Prime members in hopes to also get more and more people to sign up and stick with their Amazon Prime. Now, as we can all guess, this news sent shares of telecommunication stocks even lower. And this is, of course, during a time where Verizon, AT&T, and others have already been beat up a lot during this recent downturn. Now, an Amazon spokesperson did say that we are always exploring adding even more benefits for our Prime members, but don't have plans to add wireless at this time. And although Verizon and AT&T said that they're not in discussions with Amazon to resell wireless services at this time, Dish representatives weren't immediately available to comment. So at this time, it's all sort of up in the air. But with more and more different wireless carriers coming about over the last few years, especially a lot of pretty decent discount carriers breaking into the mobile wireless scene, it is putting more and more pressure on companies like Verizon and definitely AT&T. Now, Verizon's $11 billion dividend should remain covered with a reasonable free cash flow payout ratio near around 65%, but chipping away at the company's $150 billion debt pile, which spiked back in 2021, is going to take some time and, of course, is one of the big talking points when investors are not so sure about Verizon. And unfortunately, because of the way Verizon has traded over the last year now or so, the Verizon losses are now extending deeper and deeper. The year-to-date total return with the big dividend included is down 11.01%, while the S&P 500 is up 12.81%. Verizon on the last year is down 28.33%. Verizon on the last 3 years is down 28.67%. And Verizon on the 5-year chart with total return being the metric, which means dividends included, Verizon is down 8.41%. So I know what you're probably thinking. You're probably thinking, wow, you made one of the worst investment decisions of all time by buying into Verizon around 2 or 3 years ago. And although I'll admit, if you said that, you are partially right. The good news is that with my 1,000 shares of Verizon, I have been selling covered calls on a weekly, monthly, or quarterly basis, and I have been able to at least bring back over the last 2 to 3 years somewhere of around maybe $4,000 or $5,000 in profit from the option trading that I've been conducting with my shares of Verizon. So although on my 1,000 shares of Verizon, I'm still down around $15,000 or so as far as share price goes, if you take into consideration the money I've made back from options trading and the dividends that have been paid, I'm probably only down somewhere around $7,000 or $8,000, which, don't get me wrong, that's still very, very bad. But I guess that's just me trying to have a positive outlook. Another thing a lot of Verizon investors are concerned about, including myself, is of course the question, is Verizon stock a typical yield trap? Now, a yield trap refers to an investment that appears to have an attractive yield or dividend payout, but is actually accompanied by significant risks or unsustainable conditions like a continuously decaying share price. Now, when it comes to yield traps, investors may be lured in by the high yield offered by the investment. And even though there might be a high yield, investors fail to adequately assess the underlying factors that may jeopardize the total return of the investment. So even if Verizon, for example, is offering around a 7% yield right now, it doesn't necessarily mean that the investment is sound. And with the way that Verizon has traded over the past few years since I've owned it, I would say that Verizon very well could be a yield trap. So the last thing that we have to go over is, where does Verizon shareholders go from here, and is Verizon a potential buying opportunity at these levels? Well, even though SimplySafeDividends.com still gives Verizon an 80, which means that the dividend is apparently rather safe, it still feels like Verizon might have had its best days behind it. But even with Verizon's future risks ahead of it, the wireless carrier still seems to be a rather reliable income stock for investors. The company has hard to replace network assets. Verizon also has a brand recognition that we can all agree on, and a massive subscriber base that should, for the most part, at least in the short term, remain around until maybe the day that Amazon Prime launches something comparable. But I want to hear what you guys think down below when it comes to Verizon. Do you think this telecommunications stock is a potential buying opportunity at this time with the current way that it's been trading and with all of the future headwinds in front of it? Or on the other hand, would you sort of agree more with me, where you think that this company does offer some potential for some upside and a really good starting dividend, but unfortunately offers a rather risky future ahead that dividend investors should likely stay away from? Let me know what you think. Please comment down below. If you enjoyed this video and you want to see more videos like this, make sure to please drop a like on this video and subscribe for more. Thanks as always for stopping by, guys, and I'll see you in the next one.